Good day all. Ira Epstein of Linn & Associates with your metals market update for this Tuesday, the 9th of April, 2019, just after 4:30 p.m. Central Daylight Time. Well, I wasn't thinking that the Trump administration, until they at least had China wrapped up, were going to start picking a fight with others, but they did it today, threatening to put in the European Union on them $11 billion worth of tariffs. And of course, the EU is meeting now in a meeting for retaliation. We don't have China done yet, and here we've picked another front. That weighed on the stock market. It drove people to safe havens. They bought the gold market today. They bought the bonds, the notes, and they bought the Japanese yen. It was the typical fear. We have enough problems with economic slowdown in parts of the world, and now this new thing is a new wrinkle. We have in the morning the European Central Bank monetary policy meeting. We'll find out what, if anything, they can do. Keep in the back of your mind, they're normally very far behind the 8 ball. They don't get ahead of the curve. They stay way back, and that's been a problem. When you take a look at a weekly chart of closes of gold, and this is just closing prices, you can see how the market did fall back on a closing basis to support at the 18-week moving average of closes. When we put on a daily bar chart, you can see how the market's getting a lift after this spike low right through here. It doesn't have a chart pattern, to me, that is trending yet. It's got one of a lower low, a higher high. When we take a look at the battleground, it seems to be on the upside, the 18-day average of closes in red. On the downside, the 100-day average of closes for the support. If we take a look at Bollinger Bands, which are these black lines right here and here, those dashed black lines, keep in the back of your mind what a Bollinger Band is. It's an algorithm designed to keep the market trading within it 95% of the time. And often, if a band is going sideways, the first challenge on the downside proves to be supportive. The first challenge on the upside, resistance. Very typical in a sideways pattern. That pattern hasn't changed. But we still don't have a trend. We have that lower low, higher high. We certainly have upside bias, and we have momentum trying to pick up. If the market just decided to rally and not hang around the 18-day average of closes, why 1327 is a possibility for that next resistance point. When we come to GLD, which often mirrors the futures, or the futures mirror the ETF, sometimes I wonder which leads the other. Again, we got back down to that lower Bollinger Band and have had a straight up move without a trend. You've got the higher high, you have the lower low, momentum up and bias up. In GDX, again, the same pattern, lower and low, higher high. So these are markets in the gold complex specifically that are just more or less staying sideways and moving in these waves back and forth, hard to catch. The silver market did not do well today against the first challenge like it did yesterday of the gold. You can see that you pulled back to this 18-day average of closes, and this is the differential of how many ounces of silver it would take in a perfect world to buy an ounce of gold, just dividing one price by the other. In this case, we're taking June gold and dividing the silver. And you can see you needed 85.56 ounces yesterday. It's back over 86. More important, it's unable to get a trend going by staying under this, which would give silver an edge over the gold. You're not getting that at this point. You see in the silver also how the market's got a lower low, higher high. The settlement today, unlike the gold, under the 18-day average of closes. Where did it go up to? Yesterday it got to that 18-day average, and I most likely said that the next resistance, the 100-day, the green line, if it can get over there, then you're talking the upper Bollinger Band potential. But instead it just went into that zone and fell back. That's okay. I'd almost like to see the market take out today's low and then turn up, so I get a pattern of higher highs, higher lows. The dilemma is, why would the silver or other metals move up if we're talking another front on a trade war with Europe? And that's what the market's trying to figure out. If we look at the copper, if you knew nothing else other than my explanation of Bollinger Bands, you take a look at where the first Bollinger Band line that we haven't hit in a while, it's right up here. You go up today and you back off right away. I'm not the only one that looks at these things, but I probably have one of the better understandings, or maybe not understandings, better ways of vocalizing what I do. Because I do listen to a lot of people about this, but I don't think they explain it the same way. In terms of momentum, slightly up, but more sideways. The pattern on the chart, lower low, higher high, into a resistance point. This market is obviously begging, give us a trade deal somewhere. That's what copper, an industrial metal, as it's called, Dr. Economy, Dr. Copper, tells you. When we look at the platinum market, the market had gotten up and spent 1, 2, if I'm correct, 3 days in a row over the upper Bollinger Band. Day 1, 2, 3. I count each of those days as one of the 5% of the times that the market will stay over under a Bollinger Band. And when they're in succession, it tells me I've got 2% chance of the market staying over it the next day. Another way to look at it, maybe it's time to take money off the table, thinking if you're still bullish, maybe you can get in at a better price. And that's what the market seems to be doing. Now, the support's all the way back down at the 867 level. The market is overbought, hit upside targets. That does not mean it's still not bullish. It's just what I said it is. In the palladium market, a bit of a rally today. Okay, it's an oversold market that has had a collapse in prices, never did get to the lower Bollinger Band. Instead, it went to the 100-day average of closes and found support. But the market still isn't showing any sign yet that it's through on this correction other than being oversold. A sign would be to take out right here the 1413 level. At least that would break the pattern of lower highs, lower lows, and then you set up for a challenge potentially, doesn't have to, but the 18-day average of closes. Barring that, the next support back to the 100-day average of closes. In the dollar index, this market today threw out a bad signal. You had an embedded reading where both the K and the D lines and the slow stochastics, these two numbers over 80, had stayed that way. And they were that way for several days, 4 days to be honest. Today the market loses it. Now, the only time you can get back your embedded reading, which is a sign that the market on breaks still has the bulls buying it, would be, excuse me, the very next day. Don't know. The odds don't favor it when you close near the low of a break. And the market didn't do that today. It closed in the top part of the range. So it's going to be one of these interesting times to see if it does follow through. Does it find support at the 18-day average? The odds favor that when you lose an embedded reading, price and the 18-day average come together. So we'll see if that all fits in. You know, I talk about this and a heck of a lot more every morning. I wake up first thing in the morning, I do my reading, and then I start recording a morning video. And the reason is traders want current market information. And my idea is I can offer you better information in a video than writing about it. Why? Because you're seeing the chart action. And I'm explaining what I'm seeing going on. I do it in a manner early so that you can see what's going on. I used to get these out by 9 o'clock, forget that. I put out today's, believe it or not, at least I started recording at 6:07 in the morning. And I record in just this sequence that you've got. The reason I do this for you is if you want to grab in the bottom and you're not interested in stock indices, you want to know for tomorrow something about, let's say, the soft commodities. You just drag right to where the softs are, let go, you'll see where the videos are. You know I'm doing them in this sequence and away you go. You get very used to it very quickly. And that way I don't have to do a video for each one of these. I'm able to put out a lot more for you in a shorter period of time. Allergy season. Chart action. I'm going to go through the chart action. I'm going to tell you what I think the pros are doing, what I would think a guy with my experience would be doing in a market. Technical and fundamentals, if there's something new, like tomorrow morning we get the European Central Bank monetary policy statement. We get consumer prices. Well, those prices to consumer will come out at 7:30. I might have an idea, though, on what the ECB is doing before then, and then I can throw out the trade ideas. If there's a big reports like those, sometimes I wait to 7:30 and then record right at that time so you get the benefit of what that's doing. I make up my mind the night before as to which reports I think warrant me doing that. So I work my schedule around one thing, making things good for my clientele. How do I do it? Well, I offer an introductory price, if you haven't tried it, of basically 26 cents a day for 30 days. I think that's pretty darn fair. To find out more, and there's no contract with us, just go to our website, www.iraepstein.com. Go under the word either research or education, Ira's morning subscriber video. It explains it. You can sign up right there and away you go. I'm Ira Epstein. You have a good day. I'll see you tomorrow.